All right, so big movement with interest rates this past month. We will analyze that and how it pertains to the inventory and sales coming up in the San Diego real estate market update for March. So here we go. My name is Clemens Ruas with the Romero Ruas Group at Berkshire Hathaway. All right, so the story of the day is interest rates. Interest rates actually are coming down. Currently, they're sitting at 6.79% for a 30-year fixed loan. That's down from 7.05. Compared to the same time last year, we're also a little bit higher at 6.92. And we can expect with yesterday's and the days before stock market downturn that adds uncertainty to the economy, and unfortunately that actually helps interest rates come down. So if we see more economic instability, then we can probably assume that interest rates will keep coming down. As far as inventory actually decreased, which is a little bit odd since last year we saw that increase about 1%, and we continued seeing that increase probably until September, October months. And it is not common to see this number come down in February, but I'm pretty sure March numbers will probably be better because also interest rates are having effect on sellers that have been waiting for interest rates to come down to make that up or down leg purchase are probably going to come back to the market to put their homes on the market and switch to that next property. Compared to that to last year though, we are 11% higher in inventory. And for sales, we actually saw an increase. This could also be attributed to just a regular cyclical market, or also because of the lower interest rates. We did see an uptick in mortgage applications. So we're pretty confident that probably March numbers will also be higher as sales continue to move upward. But compared to at the same time last year, we also saw a similar increase, about 11%. However, we are roughly it's the same as we were last year, which last year's sales numbers were really not that good. Compared to prices actually saw an increase about 2.7% last month to around $613 a square foot, or a $1,075,000 for a median priced home for San Diego County. Compared to the same time last year, there was a 2.8% increase, which is very similar. We're at $586 a square foot, which puts us at roughly 4.6% higher in home prices than we were last year. And market time, we actually saw a decrease as well with the lower inventory. I think brought more people on the market, so there was more competition. We definitely felt that in the multiple offer scenarios that we saw, especially for properties under $1 million. But 18% decrease from last month. Compared to the same time last year, we saw a 14% decrease to 24 days on the market. And we are, however, 30% higher in market time than we were last year. The difference between the list to sales price ratio, we actually saw a huge increase from 97.5% to 98.6%, meaning a lot more buyers on the table offering maybe trying to outbid each other and to get that property. We can see that last year we were at 9.8%, which is definitely a lot higher. But I guess it is kind of cyclical with right now the spring buying market. There's probably going to be more buyers on the table. Luxury sales, we saw an increase as well of 22% in sales. These are properties over $2 million. Compared to that same time last year, there was a 10% increase in sales. So unlike the regular market, we saw that the luxury market actually did a little bit better as far as percentages go. And luxury inventory, we saw an increase of 3.5%. These are properties over $2 million. And we are 6.8% higher in inventory than we were last year. And again, thank you very much for watching this episode of the market update. And don't forget to track your home's value at www.mysanDiegoValley.com. Connect with us, subscribe to our YouTube channel, or follow us on social media. Again, thank you very much for watching, and see you next month.